Hi, my name's Joe Achaturo. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. All right, dependents. What are dependents? I'll tell you what dependents are not. Dependents are not your dogs or your cats. All right? Dependents are not animals. Dependents are people. If you try to claim your animals as dependents, there's a good chance you're going to go to jail. All right? So there's going to be two types of dependents. There's going to be a child and a non-child dependent. Right? And this video is going to go over the criteria for who is going to claim a dependent. It's also going to be at the end of the video, we're going to discuss who needs to file their own tax return. I'm just going to throw that in there for a little extra information, because as part of being a dependent, sometimes the dependents need to file their own tax returns and sometimes they don't. So this information sort of ties together. So who's a dependent? A qualifying child or a qualifying relative. Now, relative is it's sort of a misnomer in this particular instance, because they don't necessarily need to be related to you. Right? It could be somebody that lived with you for the entire year. A qualifying relative may be a parent who doesn't live with you for the entire year. That's a big characteristic with a qualifying relative versus a qualifying child. Qualifying child must live with you for half a year. Qualifying relative doesn't have to live with you if they're related, right? So you can have a parent that you're taking care of that lives in their own home, but you're paying the home, you're paying most of the bills. You're paying over half of their support necessary for them to stay alive. If they're not related to you, though, then they have to live with you for an entire year. So let's go over the first person, the qualifying child. There's a difference between a qualifying child and a qualifying relative, because a qualifying child is going to enable you to get certain tax credits. I'm going to go do a whole separate video on credits. But that's basically all you need to know about a qualifying child versus a qualifying relative. Who is a qualifying child, right? A son, a daughter, a stepchild, a foster child, a brother, a sister, a stepbrother, stepsister, half brothers and sisters, or any descendants of the listed, right? So if you have a grandchild or a niece or a nephew, they can also be qualifying children. U.S. citizens, so the second thing you need to be is a citizen of the United States, or a U.S. national, or a resident alien, or, two exceptions, a resident of Canada or Mexico. Next, to be a qualifying child, there are age restrictions. This year is, right now when I'm filming this, is January 2019. As of January, when I do your taxes, if I was to do your taxes, or if you're to do your own taxes, in January of 2019, I'm going to be doing 2018's tax return. Okay? So at the end of 2018, so the end of that tax year, if your child is under the age of 19, so if they're 18 years old or younger, at the end of the year, then they are a qualifying child, that they meet the age restriction. If they are under age 24, so if they are 23 or younger, and they are a full-time student, they meet the age restriction. What is a full-time student? A full-time student is someone going to school full-time, and full-time is defined as whatever that institution itself defines as full-time. In addition, full-time also means at least 5 months out of the year. So greater than 5 months. The final age determinant is really it could be any age. If the dependent is going to be permanently and totally disabled. Right? If they're permanently and totally disabled, there's no age restriction, right? I have a 50-year-old son who's permanently and totally disabled. I can claim them as a dependent, even if they don't live with me for the full year. Next. You must provide over half their support. What's that mean? Financial support, right? Basically, you provide over half the financial support. They must live with you for more than half the year. More than half the year. There are instances in which you can get away with that, right? So certain things, if they go to the army, if they are in college, if they go to juvenile detention, there are certain exceptions to that. I'll go over those later in the video. You can claim someone as a dependent if they're filing a return strictly for the purposes of getting back taxes withheld or estimated taxes paid. So generally, if you have a child who's 16, let's say, and they're working, and their boss or their employer withholds money from their paycheck for federal tax withholdings, and you want to get that money back, you can file a tax return for them and still claim them as a dependent. In addition, as long as they're not filing a joint tax return and itemizing the deduction, you can also claim them as a dependent. Now, a qualifying relative. So that was all the rules for a qualifying child. Now we're moving on to a qualifying relative. You'll see there's not much of a difference between a qualifying relative and a qualifying child as far as the people. So, son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, halves, or any descendants of the listed, right? Grandchildren, nieces, nephews. Now, in addition to those, we're going to add a few relatives. These are going to be generally the people that would be older than you, right? Parents, grandparents, aunts and uncles, in-laws, step-parents, father-in-law, sister-in-law, brother-in-law, mother-in-law, okay, etc. In order to be a qualifying relative, in addition, you might not need to be related at all. And if they're not related at all, actually, then they have to live with you for a full year. That's the only extra criteria. So a U.S. citizen, they have to be like before, right? They have to be a U.S. citizen, U.S. national, U.S. resident alien, or a resident of Canada or Mexico. Now, any person other than your spouse who lived with you as a member of your household for the full year, for the full tax year in question, if your relationship didn't violate local law, right? So I can have a friend living on my couch for the full year. I provide more than half their benefit, more than half of their support financially. I can claim them as a dependent, right? You must provide over half the support. Another criteria. They aren't filing, like before, a joint return that's itemized, or they can file a return if it's only to claim a refund of income taxes withheld. Gross income less than $4,150. That's another criteria to being able to claim someone as a dependent. If their income is less than $4,150. If it's more, they have to file their own tax return. And you can't claim them as a dependent. So, gross income does not, this $4,150 number, this does not include Social Security. So, if you have a parent, they take in $10,000 a year in Social Security, and they have $2,000 of, let's say they have a little side gig. Well, they don't really meet the income criteria, so they haven't surpassed it, so they can still be a dependent if you provide more than half of the financial support for them. 8, if you're permanently and fully disabled. There are special rules. Again, this isn't going to be a majority of the population out there, so I'm really not going to go over that in great detail. If I do, or if somebody wants to make a video on this, let me know. I will put together a separate video on handicap and disabled individuals. Now, there are going to be special rules to the dependents. Now, these special rules are going to be separate from what I went over before. So if I go back on the slide, these slides were the qualifying relative, right? So everything I went over previously was the qualifying relative. These are special rules. They pertain to all sorts of stuff. So in a divorce, this is going to pertain to the child. A custodial parent, and who is a custodial parent? A custodial parent is a parent that has the child the majority of the nights throughout the year. That's who the custodial parent is. If both parents have the child for the same exact number of nights, then the custodial parent will be the child that has higher income in that particular year. So the custodial parent could change from year to year, right? So maybe year 1, I get the kid for the majority of the nights. Year 2, you get the kid for the majority of the nights. The custodial parent is going to change year to year, potentially. So, divorce agreements between 1985 and 2008. The non-custodial parent can claim the child without regard to any condition, such as child support or payments. These are the criteria for a non-custodial parent. The other parent who must not claim the child as a dependent, and the years the child is going to be released from being the custodial parent's dependent need to be listed in some way, shape, or form. Usually they're listed as odd years or even years, things like that. So it would say, a normal agreement would say, in every odd year, the non-custodial parent can have the ability to claim the child as the dependent. Something like this. In 85 to 2008, there's a form. You don't need to file a specific form. You just need to provide the IRS with the divorce agreement or divorce decree, right? The pages must include all information listed in 1, 2, and 3 here, right? I, and I. Everything must be included in what you provide to the IRS. All these things. In addition, there must be a cover letter, right? A cover page Must include the other parent's social security number. All pages of the agreement, again, must include the information written here. And there must be a signature page which includes the date and both signatures of the parents. After 2008, so if you were to make an agreement and then you make changes to the agreement in 2009, you don't send you typically are not going to send the agreement to the IRS. You're just going to fill out Form 8332. I recommend filling out Form 8332 because if the IRS gives you a form to do something, you should probably use it. If you don't use the form, you might miss some stuff that the IRS requires. There might be some questions involved based on what you provide the IRS with. I mean, again, like this says here, you can file a substantially similar statement written to Form 8332. I just wouldn't. Make it simple. Use the form that the IRS gives you. Again, there must be a release with no conditions. Right? You can't say, I only grant this person the ability to claim the child as a dependent if they pay medical expenses, if they pay for school, if they pay for support, child support. You can't do that. It has to be an unconditional release. Next, special rules. Exemptions to the word citizen, right? So if you're a U.S. citizen or a U.S. national and you adopted a child that lived with you all year as a member of your household, then we're going to consider them a citizen, right? So even if you adopt a Russian child and they're not a U.S. citizen, we can claim them as a U.S. citizen. Exceptions to gross income, right? If you're permanently and totally disabled, certain income for services at a sheltered workshop may be excluded. Again, that's very detailed. That's not going to pertain to most people. If you want that info, I will create a video for you on that. Chances are I am probably not going to get too many requests for that. A temporary absence, like I mentioned before, is okay. So if you're away at school, if you're on vacation, right? So you're definitely not going to be in that household for the full year. If you had to go away for business, although I can't imagine you'd have to travel for business and you're not being paid enough traveling for business, that would bump you up over the threshold to be claimed, or for the parent to have needed to pay for more than half the support. To me, the odds of that are very small. If you need medical care, right? So let's say you live in Massachusetts, but you have to send the child to Houston to get special cancer treatments. All right, then obviously we're gonna make, the IRS has made concessions to that. If they're in military service, even if they're in juvenile detention, those are exceptions for the time lived with you. The final special rule that I'm going to go over is going to be if two or more people provide more than half the support for a relative. So you have a parent, typically this is how it works. A parent, an aunt, an uncle, something like that, a grandparent. You are going to provide more than half of their support to live. Maybe that's a big burden to you. So, and you have a brother or a cousin, and you both provide, or three cousins, and all three of you provide more than half the support for that relative. Well, at that point, any one of you who has provided at least 10% of that amount can claim the individual you are supporting as a dependent. The only caveat is only one of you each tax year can claim that dependent, right? So dependents, you can't split them, right? A person is a whole person, so you can only take a whole person as a dependent and take the whole amount. Next. All right, so do you need to file a tax return? Let's figure this out. first criteria is going to be income. All right, we're going to take a look. Did you work for your money? Or is it passive? Is it unearned income? Unearned income is going to be income from your dividends, interest, capital gains, things like that. Are you married? Right? If you're married and you have your spouse that files a tax return and they itemize deductions, and you have made $5, then you have to file your tax return. It's required. Earned or unearned income. So we have a special calculation at the end of this video, or at the end of this little segment, that's gonna a formula, or we're gonna take a look at whether or not we need to file if we have earned plus unearned income, because some people don't have any unearned income, and some people don't have any earned income. So when you have just earned income and you make over $12,000, you have to file a tax return. Why? Because your standard deduction is $12,000. So every dollar above $12,000 is going to have some sort of a tax attached to it. So there's your threshold. Now, this is particularly for people in general. It's a general threshold, right? So if you earn $12,000, I'd recommend filing your tax return anyway, because your federal tax return is going to be free. And many government programs, if you make such a low amount of money, are going to depend on you also providing proof that you don't make any money, and part of that proof is a filed tax return. So these are guidelines that say if you make over this amount, file the tax return. But I think if you're going to make, even if you make less than this, you should probably file a tax return anyway. Now, let's move on. 65 or older, or blind. See, what happens is your standard deduction goes up, and when that means your income threshold for when you need to file a tax return is also going to go up. Right? So 65 years or older and blind. So the more things wrong with you, see, the bigger deductions you get. All right? Now these are the numbers for your married. You're going to notice that they're lower. So married people do kind of get punished a bit. If your unearned income, see, this is going to be a lot lower. Let's take a look at it. Must file a tax return if you're single and your unearned income is over $1,050. These are all 2018 numbers again. If you're 65 and older or blind, $2,650 of unearned income. If you're 65 or older and blind, $4,250 of unearned income only, right? These numbers are unearned income only numbers. So you don't have any income you worked for in the particular year, 2018. If you have both unearned and earned income, here's the criteria. When you're single and you're under 65 years old, you're going to do this calculation. Your gross income, which is earned plus unearned, was more than the lodger of $1,050, or your earned income alone of $11,650 plus $350, which is $12,000. Continuing on, single dependents, the same formula, right? Same formula, just the numbers change a little bit, right? Gross income, your earned plus unearned, was more than the larger of this number, or your earned income up to that number, right? It's very simple. Same with married, just the numbers change. Just the numbers change. You can pause it here if you want to take a look at what those numbers are. But again, I recommend almost everybody file a tax return. Does the dependent need to file their own tax return? There's a special criteria. So that the last 3 pages showed specific dollar amounts. These aren't dollar amounts specifically, but these are going to be reasons for you to have to file a tax return. One is going to be you owe alternative minimum tax. I'm not really going to get into that. If you owe alternative minimum tax, you should be using a CPA because you have high amounts of income and all sorts of other things going on that are going to be a little too complex for you to really be doing your own tax return. Additional taxes on qualified plans, right? So if you have any sort of retirement plans or anything like that you pay excess taxes on because of your contributions that you make, if you make excess contributions or something like that, then you would have to pay an additional tax on those contributions. Medicare tax, Social Security tax on tips, not reported to your employer. I've never seen this, but I mean, it does happen. If you earn a certain amount of money from tips, I find most people that work in jobs that receive tips don't usually report their tips. You're supposed to, right? You're supposed to. If you don't, if you do receive your income in tips, you should, or you're supposed to, file an income tax return. There's no threshold to a dollar amount there. Additional tax on HSA plans. So if you put too much money into your HSA, you have to pay a special tax, right? That's what that is. Group term life insurance. You get some income on that. You should be filing a tax return. Railroad retirement tax on tips you reported to your employer. File a tax return. Household employment tax. That is if you have a household employee, like a maid or gardeners, you'd be wealthy. I'd find it hard to believe you wouldn't have passive income, but maybe you're at some point where you've given away all your assets, I guess. And then you'd also have household employment tax because you're paying people that work in your house. Any recapture of tax credits. If you received Archer MSA, medical savings account, Medicare Advantage medical savings account, or HSA, health savings account distributions. If you've received any of those distributions, you have to file a tax return. Any net employment earnings from self-employment, right? If you're self-employed and you've made $400 or more, file a tax return. That's also going to require Schedule C in most cases. Wages of $108.28 to be exact, right? If you do some work for a church or a qualified church control group, or some exempt group they're exempt from Social Security and Medicare taxes, and you've made over $108.28, you need to file a tax return. If you have advanced payments of your premium tax credit, what's typically going to happen is you're going to get a Form 1095-A, right? Same thing with advanced payments of health coverage tax credits, in a form of 1099-H is received. You're typically going to you're going to have to file a tax return. If you are, some people are defer income or defer foreign income, file a tax return. Again, those are sort of complex things. If you have those, a lot of times you should be just using a CPA to do your taxes. Special rules. Who doesn't need to file a tax return? Children who only have passive income. So if your child only has dividends, interest, or capital gains under $10,500, then they don't need to file a tax return. If it's above $10,500, in this particular instance, your dependent child would need to file their own tax return. So again, below a $10,500 of capital gains plus interest plus dividends, you can report that on your own personal tax return and not file one for your child by using Form 8814. And that's it as far as who needs to file a tax return. I'd recommend, if you're head of household, you definitely file. I didn't even go over that. If you're head of household, you definitely should be filing tax returns, because head of households have children. Children bring on tax credits. The only way to get the tax credits is to file a tax return. So it's a no-brainer if you're head of household that you file a tax return. And that's it. I hope you learned something about who needs to file a tax return in 2018. Have a great day. Thanks for watching the video. I hope you learned something. Please click the subscribe buttons below. And in addition, there are links taking you to the tax software that we use for most of these tutorials. When you click on the link and you use this tax software, we get credit. When we get credit, we can keep providing you with these free tutorials. So again, if you found these videos helpful, please click on the links, help support us. And in addition, if you were to join myfreecpa.com, you could get these videos without any commercial interruptions, which would help everything move along faster. And you can actually save the videos so that they're there for you year to year as your situations either remain the same or change. And it's just a one solid place for you to find exactly what you need to help you prepare your tax returns every year. So once again, thank you and have a great day. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a Do Your Own Taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.